This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, now let's take a look again at the gold market. On the gold market, I think, guys, today still will be the day of the expectation, because as we have discussed yesterday, although we have the setup on the daily time frame for the Judd-Napoli directional bearish stretch pattern, that is a combination of the oversold condition and fib resistance, we do not have still the triggering pattern on the lower time frame. I mean the pattern that will let us to enter on the short side of the market, and that will give us the sign, the signal of the short-term reversal on the intraday charts that will allow us to enter short with the daily stretch setup. And here there are two possible patterns that could be formed on the gold market. First of all, take a look that market stands very close and now is flirting with the MACD predictor. That is always could be the chance for appearing of the stab grabber pattern. And if it will appear, that will be the bearish one. That will be very significant pattern, because this pattern will suggest the taking out of the previous lows. And the previous lows you can see right here. It means usually the stab grabber leads to the most recent swing low, not the major low, because that is also the low. You can see this low is higher than this one, and this higher than this one. And that's why this is the previous low. Anyway, this will be the triggering pattern for downward action. As we said, since market is oversold on the long-term charts, on the weekly time frame, on the monthly time frame, we can't count on the too extended move to the downside. But we easily can count on that market will hold somewhere around these lows, reaching some area around these lows inside of the already made low. And from that standpoint, the target of the stretch pattern could be very useful for us, because recall that the target of this pattern is the middle between the bands of the oscillator predictor that shows the overbought and oversold condition, but this is the dynamic parameter. And yesterday it was around 1345, but today it's already 1351, because you could see the bands turns to the upside. But that's a bit extended moments. That's not very interesting for us currently. What is more interesting for us is the appearing of the pattern, and that is the pattern to watch for during today's trade action. So if this will be the stab grabber, that will be very significant for us, and could give us more confidence when they're entering short. That's what about the daily time frame. On the 4-hour time frame, yesterday we have the assumption that probably market will continue higher, mostly because of the price action that it has shown here. Since that leg of the ABCD pattern was flatter and market has hit the 100% extension, logically it should turn to the downside. But since it hasn't done this and continue move higher, this tells us that probably it will proceed to the 1618 extension. That is also in agreement with the 50% resistance area. That's the second reason why we should wait a bit more and wait when the market will stand at the significant resistance that probably will let us to enter short. On the hourly time frame, we see how it could happen here. I can't exclude that here could be some sort of the butterfly. That's just an assumption, because here we see also the potential for the left wing. To form the right wing, market should show the retracement first, then acceleration higher. But what is interesting is that 1618 extension of that swing low from this swing to the downside stands precisely at the target of this ABCD pattern on the 4-hour time frame, and precisely at the 50% resistance. If market will hit it, that will be the solid resistance cluster that also will be the destination point of the reversal pattern. And all that stuff will be right in a row with the context of the daily stretch, bearish stretch. That will be the nice context for the at least trying to take the short with the potential move to the downside. At least we will hardly get the better setup, bearish setup in the nearest term on the gold market, because you can see it's really lack of significant patterns, tremendous action. It's just a sloppy and choppy price action in the retracement of this bearish flag. That's in fact the only that we have currently. So by these reasons, I think that today still will be the time of the expectation, because we do not have neither the reaching of the 1618 extension of the ABCD pattern on the 4-hour time frame, nor the reaching the target of this potential butterfly. It's 1618, and this is around 1457. So that's why I think that on the gold market it's better to stay flat and wait when the market will finally reach this resistance cluster on the daily time frame. We'll complete this reversal pattern that will let us to enter short with the more confidence.